Okay, we're recording this video on Saturday, the 21st of January 2017. Hope you're doing well. Hope you're enjoying your weekend. Hope you had a good week's trading. Hope you enjoyed the inauguration. Anyway, it is time to talk about the British pound again because we had some really interesting activity this week. Last time we spoke about the pound was on the 2nd of December 2016, where we had British pound signs of life, and we were setting up for a change in trend and a reversal of the weakness that we've had in the pound. If you revisit that video, I said all we need to do now is kind of go through a testing phase to test the low, and once that testing process has kind of taken place, then we'd start to set up for the rally. And I think we're now done on the testing. So let me just show you quickly what I'm seeing on the British pound chart. So this is at BP, which is the futures contract of the British pound on TradeStation. This is the usual setup. On the left hand side we've got the kind of volume view where we've got better pro-am with the average trade size and better momentum, giving us volume momentum here along with our price levels on 3 different time frames all in one. And then on the right hand side we have the system view where I just have the price levels and a handy dandy uptrend and downtrend type of system to be able to show us strength and weakness. But I think the picture is now kind of a lot clearer with the testing that we did this week. With these kind of bars that we had over the last several days. So first of all, June 20th was the Brexit vote, bang, and that's that day. You can see kind of prior to that the pound was rallying a little bit where people were thinking surely we're not going to Brexit, that would be, you know, catastrophe. And then when the Brexit vote kind of came out, all of a sudden people had to reverse their positions, go the other way, and we had this huge kind of sell-off kind of starting here with these exhaustion sells, getting this move going, all these professional bars kind of coming in here. We crashed through 120 and this thing continued down until we had like the mirror image. So all the volume that was selling down here was then taking profits later on at $1.20, kind of down here with exhaustion sell. So I like seeing these mirror moves where you've got all the volume that was traded here being picked up here. Then we go through this testing phase, bang, 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 into 120. The low of this kind of move down here was 2060, and then this week we went to just a smidgen above 120.01. So that obviously an incredibly important psychological level at 120. So that was kind of the level where the professionals came back in. Always remember to look at these big blue professional ranging bars. They're really important. So on this day, you know, the highs and lows, we need to test those to figure out where we're going to break. First of all, we go for the highs. We test the highs. We go through an amateur bar, kind of looking at the highs there. Gets rejected at the highs, so we're going to look at the lows. We get more kind of amateur down bars into their lows, and then we break past the lows of that one and go look at 120 here with this blue professional bar, and finally this blue professional bar, which gives us another kind of fairly large range big blue professional bar, and this time breaking above the highs of this will be absolutely key. So 24.31 kind of into the 24.50 or the 25 kind of level will be absolutely key, and that'll show us that we're breaking out of this range. We've done enough testing kind of down here and we're off to a trend break to the upside. And I suppose everybody thinks now that the picture is a lot clearer. You know, the uncertainty that we had here was about how Britain is going to exit, hard, soft, you know, kind of exit and so on. And I think now the picture has become a lot clearer. Theresa May had an important speech this week, basically saying it was going to be a hard exit, which means the minimum of concessions from the Europeans to the Brits as they exit. And so I think people can start to now make plans because things are a little bit clearer. It was or is in the middle of this one of these 5-step setups. So you can see, you know, strength into weakness, into strength, into weakness, this big downtrending move. And for me, a 5-step setup looks like this. You know, it's exhaustion, sol, bullish divergence is step 1. So volume first, then price. So we're putting in pullback to end of trends on a left shoulder here on the lowest time frame. Then pullback to end of trend on the intermediate time frame. That's kind of a head there. We'll need to put in at some point pullback to end of trend on the highest time frame here. That'll come in, but I think that's going to be at higher levels, kind of more over here, and that end of trend will be somewhere above 120. My guess would be. So that final pullback to end of trend needs to be put in, but this 120 level was so important this week, and those blue professional bars, I think that is psychologically an important point to kind of mark with this weekend's video. So step 2 is the end of trends signals. Step 3 is first sign of strength, so that's breaking above here. Then we have some low risk entry points. There's one that comes in here, not really low enough. We went to another support here and then briefly crashed below it, but now we've kind of been caught by the next highest time frame. Support comes in from the next highest time frame, and we bounce back immediately kind of above that. So although it's still signaling weakness at the moment, the next time we break a resistance, I think that'll be us kind of on our way to breaking into an uptrend, and all of a sudden this thing kind of turning around into red bars as we've had in previous kind of rallies. So that's kind of the two views on the British pound here. Versus the euro, unfortunately we can't look at volume versus the euro because you're looking at just a cash market here. So this is the euro versus the pound, EURGBP on TradeStation. And look, no volume patterns, no better momentum here, no better pro-am signals here, just because we don't have the volume data on those cash forex markets. But this is a period where the euro was weakening, then the euro's been strengthening here with red bars, and we've come into more pullback to end of trends. First of all, we had this left shoulder being made, then the head of the move, and I think we're going support to resistance on the intermediate time frame, which will mark the right shoulder here. So left shoulder, head, right shoulder here as we roll over. So we'll go through a period now of weakness of the euro versus the pound, having had the reverse kind of going on here, and expecting kind of worse news out of Europe and better news out of the UK. So however that kind of happens, I think the eurozone will start to have more kind of obvious problems, and the Brits can maybe finally kind of get their act together and start taking advantage of all of the good things that are potentially possible out of the Brexit. So weakness of the euro versus the British pound kind of happening there. How to play this? Well, I signaled this a few months ago. I like this kind of monthly scan that I do of the ETFs, looking at their dividend yields and finding kind of value plays. And about 6 months ago, the UK market, EWU, which is the ETF for the FTSE 100 priced in US dollars, started to kind of look interesting from a value perspective, and I think now we've done enough kind of testing to the downside that it's looking interesting for a macro play. So EWU does best when the pound is going up and when the FTSE, the stock market index, is going up. Although the FTSE has been making record highs recently, the pound has actually been weakening during that time. So you need both to be happening at the same time for a real strong market. So more money will flood into the British economy and be invested in the UK, and then the equities market will continue to kind of strengthen, and you've got the two things going on, the pound strengthening and the equities market strengthening. So EWU, I mean, these are a little bit kind of jumpy and jerky. They do follow to some extent the index, obviously, but you do find these kind of unsettling gaps kind of around the place. It's a big ETF. I think there's about 2 billion invested in this, but it does tend to be a little bit kind of volatile at times. But anyway, so we've made it's almost like a triple bottom kind of down here. We've kind of come into the lows again and again here, and all of a sudden, so we've got pullback end of trend on the highest time frame being made here. Then we've gone another resistance to support going in here, and we're starting to break into an uptrend, and I can show you that on the system side of things here. So there we go, all these red bars kind of going on here, confirmed uptrend, low risk entry point. We start breaking above these resistance lines on the lowest and the intermediate time frame, and that all of a sudden, bingo, we got ourselves a proper uptrend happening here. So a break above 31.50 to 32s, that will give us kind of confirmation that this thing is kind of on the way. Is it interesting as a tradable? For me, don't think so. Not quite kind of enough in it. I mean, I'm in pretty deep into the RSX, which is the Russian ETF, and I took that one because there was more kind of potential upside in terms of percentage returns. This, I think, is still have some decent returns on the upside, and I think it's a less volatile play than something like RSX. But for me, I'd rather be in RSX than this. So although I think it will start to strengthen and go up, just the potential upside is maybe not as great as some other things that are happening at the moment. So anyway, there we go. That is the story with the British pound. I think the pound's going to start to strengthen. I think the EWU is kind of interesting for a macro play there. In terms of other markets that are going on, this is what I'm seeing on a whole bunch of markets. This is all the bond markets, gold and silver. We had this change of trend. As soon as we put in our exhaustion by bearish divergence, we started to break into a downtrend on all the bonds, on gold and silver and so on. We had these really steep declines, and we've had some strength over the last several couple of weeks here where we've kind of found a bottom, but we're going through a testing phase, putting in pullback to end of trend on the lowest time frame that's syncing up with support on the highest time frame here. So we're going through a testing phase on these bond markets, gold and silver, to find where that support point is, and then I think we'll set off for a kind of counter trend rally in these markets to see where this to test into this high. So I think that's going to be the play. Some continued weakness in bonds, gold and silver, until we've tested into those lows, and then go for a rally in those markets for a couple of months to test back into those highs. So for me, that's what I'm looking at, which will be interesting. Now, the counter trend to that is if bonds start to strengthen, potentially there's some equities weakness to be had. We're certainly kind of pretty fairly cooked on the upside on equities, but not broken any significant supports on the downside. So let us see. It's kind of potential there for strength in bonds and equities in weakness, but at the moment we're still showing strength in equities. Anyway, there we go. British pound video. It's interesting what's happening there, and yeah, let's see how that thing develops over the next several weeks and months.